Good afternoon, this is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, the 6th of February, 2007, and the market's closed. So we'll take a look at the spiders on the screen right now. The S&P 500 did close with a slight loss, just a 5-cent loss, which is the first down day, I guess, that we've had on about 6 sessions after the market faked out people back in here from this failed breakout. And then we had the Federal Reserve come in and not make any changes to monetary policy. That's the day that the market took off. And it's been adding to those gains and adding to the frustration and losses of the short sellers since then, as the market continues to grind higher along the path of least resistance, which, as we know, for the past 6 or so months has been very bullishly higher. So the S&P 500 is close to these multi-year highs, and on a 10-minute time frame, if we take a look in here, what we saw yesterday was our first signs of distribution. I had pointed that out, saying that what that means basically, it doesn't mean sell short, because the trend is still bullish. As long as we have this rising 5-day moving average, we're going to consider the short-term trend bullish. And what this really meant was that it marks the beginning of indecision on the short-term time frame. And after such a quick and powerful move like the one we've just seen from this 142.75 up to 145 level, it's normal to see some kind of consolidation of the gains. And again, the gains are going to be digested either by pulling back in price or consolidating sideways through time, which is what this is looking like in here. Which means that eventually that makes it stronger for the market to continue higher. So if you're selling short, you're still early, you're still fighting the trend. Things have gotten a little bit more neutral the last day or two, and I still believe that's the case. Looks like short-term resistance is 145, and our support is right here at about 144.30. So those are the important numbers going forward. Maybe we're going to get a pullback. I don't know. I don't have a crystal ball here. I just want to listen to the message of the market and base my trades according to what the market says rather than try and predict what's next. If I had a gun to my head, I'd say the next move would have to be higher, because that's the path of least resistance, and as long as the market is in an uptrend, the odds are going to be more favorable to the upside. The Nasdaq 100 today, if we look in here, this market lost 7 cents. It had a pretty good little shakeout first thing in the morning and kind of broke down through that important support level that where we'd seen the breakout occur from. And this was, again, this is the Fed move over here from last day of last month. But the market broke past that 43.90 level, tested it as support in here, and then today it failed through that level but was able to recover. So today's low is going to be important going forward, about 43.65. But it did recover. It's back above that advancing 5-day moving average. So in the short term, it's kind of mixed in here. If you look at these, the red, blue, and green moving averages, they're all kind of chopping side. Well, the short term is up, intermediate and longer term are down. So it's telling us that there's indecision in here. And looking at the daily time frame, that's clearly been the case, as we know, for the last 6 months since we first saw the first signs of distribution with that 10 and 20-day moving average crossing back and forth over here at about the first week of December. So this market remains neutral. There isn't an advantage to long or short. One possible bullish scenario is that we had a nice little shakeout in here today, and now if the market can get back above that 44.45 level that we've been looking at as resistance, that which doesn't kill the market will only make it stronger. And the people who threw their stocks away and started to get short in here today, if the market can get back up above that level, that 44.45 level, then I think we could see the shorts get squeezed higher in here. We've been looking at this as a potential inverted head and shoulders pattern, and you don't buy until the breakout past the neckline. That's when the move is considered to be complete. Then you start looking for upward targets. That hasn't occurred, so we've remained neutral. I still think that's the best way to look at this market, is neutral right now until we can get above 44.45. Then I think we take the shorts off, catch the shorts off guard, and we could get a nice quick move higher, and I think into new high territory as well, up towards that 45.5, 46 level. The semiconductor index, nothing's really changing in here. It just continues to be a big mess on this daily time frame. The short-term 10-minute time frame, we saw a breakdown in here today. Initially, a real strong sell-off actually. but then the market did recover part of those gains. We'll have to see if this area right here, which has been important, let's take a look at the 30-minute time frame. You see that this level here has been an important level of prior support, which then acted as resistance and then support again. Now we're right back to that level near 34.30. So if the market can push back above that, same kind of scenario as the Nasdaq 100, meaning that we might have captured some shorts in here who might scramble to get out of that position and force this market higher. Not a prediction, just a potential scenario. But on the support side, down near 33.90. Breaking below that, I think that we're going to be in for some trouble. So really continues to be a mixed market, and that's what the daily time frames are saying in this Nasdaq 100 and the semiconductors. So the real strength in this market continues to be in the mid caps, which are, as we know, at multi-year all-time highs actually. And this group, what we've been looking for is in here an inverted head and shoulders pattern, which measures out to about 5.5 points or so, which gives us a price objective of about 155.5, 156. Now, typically they're not going to run right to that level, but they will have make a run towards that area. And what we want to do is just continue to monitor risk. We saw yesterday what looked like signs of distribution, but again, here's why we give the benefit of the doubt to the buyers when we have an advancing 5-day moving average, because just because we see distribution or what looks like distribution doesn't mean the market's going to break down. In fact, we give the benefit of the doubt to the buyers, and this is why, because of days like today in these mid caps. So it continues to be overall a bullish environment to trade stocks in. Let's take a look at the stocks we've been mentioning. First of all, Autodesk, ADSK. We got involved in Autodesk at 43.50, and that was right over here a couple days ago. We've been raising our stop, and today we had our stop when we came in at 44.58, so we were stopped out of that with a $1.08 gain. That was a nice place to put our stop because you could see where the downward momentum came in and took away almost all of those profits if you continued to hold on. So we're out of that one. We won't be talking about that anymore. RFMD, we're out of as well. We got involved over here at $7.80. We've been raising our stop, and we got stopped out at $7.88. So a gain of 8 cents. Nothing spectacular in there, but it's worth trading. Hoku, H-O-K-U, we got involved in at $5.20 yesterday, and found a nice surprise when we came in this morning with this stock opening up just above $6 a share. There was plenty of opportunity to sell it above $6 a share, as I suggested that you should sell half of it above $6. So you should have locked in 80 cents on half of the position, and I had suggested raising your stop to $5.55 on the balance. Let's raise that stop now to $5.65 on the balance in HOKU, and maybe we get lucky in here and the stock continues higher. Shares of JCOM, we were short. JCOM, we got short in here yesterday at $25.75. We had lowered our stop to $25.86, and we're stopped out of this one with a loss of just 9 cents. Ameritrade, symbol AMTD, we'd gotten involved in here today at $17.70. Our stop was to be at $17.58. If you want to raise it to $17.63, I suppose that's worth protecting that nickel. Why not? NTES. This stock gapped lower today. We were looking to buy it on strength. I guess that Sohu, which we got stopped out of yesterday, which was a nice place to get stopped out of because it sure beat holding it and seeing it open $2 lower this morning. But NTES was impacted by that. There was no reason to get involved in this trade. CNET, CNET, we had wanted to get involved in this one above 9.15. So it did that early on. Looked like maybe it was going to get going, but we had our stop at 9.02. And we experienced a loss of 13 cents a share in CNET. Adobe, ADBE, we were looking to get short last night, and it opened up real strong, but I didn't check the news. Maybe something happened, but my suggestion was to sell it short at $38.40, so you should have sold it short in there. Let's lower the stop in here to $38.52.